of the country improving slightly, as we saw in the earlier last week, where we had better than expected growth coming in the form of IIP and lower than expected inflation that came in the form of the consumer prices index, the CPI as we know it. But as we speak about the macros of the country, at the bottom of your screen we have the data coming in for the month of Feb in terms of wholesale price as well. So the WPI number that has come in at around 2.3%, which is lower than what the street was anticipating, and indicates that there isn't much in terms of worry when it comes to inflation. What is the one that has contributed the most? The WPI food index is down 1.3% on the month. We have primary articles index, which is down 1.7% as well, and vegetable index, that's the one which is down 15.5% on the month. We have Latha with us joining in. Latha, inflation's cooling off, worries are abating?
Well, you may squabble a bit that the Bloomberg consensus was 2.29 and it has come in at 2.38. Also, the wholesale price index at a headline level is slightly higher than the January number. I think January number was 2.31. February is 2.38. But we are really squabbling about very minor elements. The big worry for the economy was food prices, and that has fallen by a good 200 basis points. Not surprising, we saw a similar trend come in even in the consumer price index, and the wholesale price index is actually just reflecting that fairly sharp fall that we saw in consumer price index as well, especially food prices. Cereals, as you can see, that is the big element in the food basket. That's fallen. The only couple of items that are not falling are edible oils and a little bit of cereals as well. Cereals could fall a little sharply considering that the Kharif harvest is entirely in the market. So you could grumble a bit. As well, fruit was something which was resisting. But otherwise, we have seen, all articles falling rather sharply, and therefore little to complain about in terms of inflation. I think we have a guest with us. Aditi Nayar is with us. Aditi Nayar, the chief economist at ICRA, is with us. Aditi, 2.38, are we just getting more and more confident that wholesale index is not a problem anyways?
Thanks, Latha. So as you said, our forecast was also 2.3%. So this is just marginally higher than what we were expecting. I would say that overall, there are some points of concern when we look at the trajectory for the WPI inflation. But overall, it's only expected to inch up in our baseline. The points of concern, of course, are the fact that the rupee has depreciated. The Bloomberg Commodities Index, for instance, was up last month. But of course, crude oil prices have eased off quite a lot. So a lot of these factors, as of now, are counterbalancing each other. Going ahead, what happens with trade and tariff policies, especially coming out of the US, will certainly have an impact on these key matrices, especially the rupee as well as commodity prices. And that will have a bearing on how the
Aditi, we already saw a fairly decent rupee depreciation from October, November to today, or for that matter, all of February. At February, the average was almost 87. But we are not noticing any deterioration or any increase in manufactured products index, are we?
Sure, Latha. See, at a headline level, this month particularly, it is the food prices which have helped to keep the headline fairly stable. Fuel and light, I believe, is one area where we have seen the inflation rate coming in a little bit higher than what we had penciled in. And that's offset the fact that the food side has come in lower than what we expected. Overall, we're expecting only a marginal uptick going ahead in the WPI inflation. For instance, our full year averages are 2.7% for FY26 and 2.3% for FY25. But I'm just saying that these are the risk factors that we need to keep in mind.
Okay. Yeah, actually, there is a slight increase in manufactured inflation. Very, very slight, as you can see, by a few basis points. I think it's manufactured has gone up from 2.5 to 2.86. And that may perhaps be explained by a little bit of rupee inflation. You were saying something?
Yeah, I just had a curious question. We had the CPI data that came by last week, and now we have the WPI data. How much of there is an overlap between the two when it comes to the nature of the goods that are there?
Well, the wholesale index is not as food dependent as the consumer index. Consumer index is 45-46% food dependent. The wholesale index is, I think, only 25% food dependent. We have much more on fuel price as well as manufactured products. They have a higher weightage. And that's why the manufactured product index has slightly gone up from 2.51% inflation to 2.86, which explains the headline inflation going up from 2.31 to 2.38. But there was a Reserve Bank overall modeling as well that I think some 10% rupee depreciation leads to a 35 basis point rise in inflation. We are nowhere near that level of inflation. Am I right, Aditi? We don't have to worry about rupee inflation or rupee depreciation and its impact just yet, correct?
Yeah, that's quite right, Latha. Not just yet. And the other major difference between the two indices is that the CPI is about a quarter services, and there are no services in the WPI. WPI is heavily manufactured products.
Got that. So be that as it may, with the CPI, the WPI, we have the IIP and all that's taking place in the world where there is so much uncertainty around Trump-related tariffs. But at the same time, we've seen a decline in the dollar index as well. All things pulling in multiple directions. Where do you see the RBI, or what do you see as the RBI's next move?
So I certainly expect a rate cut in April. I think that's absolutely on the cards. I'm not convinced that we will necessarily get a stance change in April. I think we may get another rate cut without a stance change. Thereafter, the May GDP data, which will be the Q4 data and the full year growth number, that will be quite important to gauge whether we have a third back-to-back rate cut in the June policy, or does that end up getting pushed forward to the August policy?
Okay, so two rate cuts. The third rate cut, whether it's June or August, is what you're wondering. Just to add to the details of what we have got from the WPI now, as expected, it is vegetable oils that are higher. The year-on-year rise in vegetable oils wholesale price level is 33.5%. That's clearly because import duties were raised. The idea is that domestic manufacturing should be, or domestic production of edible oils should be encouraged. So that is clearly showing even month on month, the wholesale price index for vegetable oils is up by 1%. The other element which has gone up is tobacco products. That's gone up by 1.5% month on month. And otherwise, textiles 0.07 month on month, leather products, wood, all of them are negligible. The only things that have shown a little bit of increase are chemicals, but these are really, we are splitting hairs over here. Non-metallic metal products up by 0.6. Cement is up 0.9 month on month, but year on year it is minus 3.6. So really on manufactured products, there is nothing to sound alarm at this point in time. The only product is edible oils, and that is by design with the government raising edible oil product tariffs. Aditi Nayar, thank you very much for joining me. The consensus has clearly moved to 3 rate cuts, but that was done already when the consumer price inflation came. I don't think WPI is adding or detracting from it. It is only reinforcing our view that inflation seems well under control.
It does seem well under control by the numbers. Latha, thanks a lot for joining in. The WPI numbers on your screen, 2.38%. Absolutely no cause for concern unless you get down to extreme specifics. But for now, there is no reason to worry. We take a short break, get you more on the markets and specific stocks on the other side. Stay tuned.